Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Yesterday's market action was amazing as it reversed after being higher early in the session. The Russell was under pressure all day. I talked about the potential weakness in the small caps, and that really showed its way today. As if you read the mainstream news, what they were talking about was profit taking, rebalancing, going out of the long Russell short NASDAQ trade that I've been talking about. Otherwise, small caps versus the large cap tech stocks. But that really wasn't what was going on at all. We had Powell and Yellen. I talked to you about the team over the last year that was going to be necessary. Had no idea that Janet Yellen would show up to the party, but we had Powell and Yellen testifying today, and basically the team is fully intact. They even discussed what the cost and the financial risk of global warming is. So this sets the tone for the new administration to do everything that they want to do. The Green New Deal just restructured the entire country, spending trillions of dollars. So you thought that the 1.9 trillion was a big deal. Now they're floating the $3 trillion deal, which will follow by the $5 trillion and probably an $8 trillion deal to implement all these crazy strategies. They're going to do all these things right now in spite of what you might think. This is going to happen. How fast it'll happen? I think as fast as they can. I believe this is exactly what's likely to go on. The realities are this action will be inflationary, but they don't care right now. This is going to be the plan going forward. And what I'm expecting to see unfold is going to be amazing. Watch the replay of tomorrow's live stream or come to the live stream, because I'm going to go in depth on a lot of these details. But this is big stuff. The other thing that happened yesterday is just about everything that was negative, they discounted. So for instance, the new home sales were down 18.2%, down to about 770,000 units. And that was disastrous, but that was blamed because of the bad weather. So that everything is being written off as, hey, that's just happening like it is. It's not really material. Well, I think it is material, and I think the real news yesterday was this $3 trillion floater that they put out there. So as if all of the money being spent wasn't enough, they're floating all types of new taxes, other things, because of course if you spend the money, you've got to raise the money, even though they're going to do MMT to do it. But just come to the live stream tomorrow, because I'm going to go through this in depth. There's a lot to talk about. The other thing that I'm going to go over here in a minute, we had over 3,000 sell signals. The database has rolled over big time. So there's going to be a lot of things to unpack. I'm going to spend some time on it tonight, and tomorrow at the live stream again will be where I go in depth on all these issues. There's just a ton to talk about. Let's go ahead and take a look at the charts, see how they're set up for Wednesday's open. As I begin with the WaveTech Database, as I mentioned in the opening comments, we saw a massive amount of sell orders. There were 3,335 sell orders, only 122 buy orders, issuing an extreme negative ratio, and we also have dropped below that 22% level at 17.80. And as I've been talking about this over the last couple weeks, a penetration of 22% sets the tone for a full liquidation. Now this run of sell orders was so big, we're almost at the numbers between the 16 and 12% level. The last time in June we went down to 8%, but we had a much different setup. One of the things I will talk about a bit in the technicals tonight, but in detail tomorrow, is there's a setup that is looking very similar. I've talked about a 55-week cycle that was coming in, and it has hit, and we're starting to see a fair amount of weakness. So there's a lot of things that are likely to be challenged, as I mentioned in last night's video. So let's go ahead and take a look at the S&P. A quick review of the S&P futures. We're up 250 points. We were down earlier about 8 to 12 points. We've rebounded. The market's finding a little bit of support overnight. I don't think much is going to happen ahead of more testimony from Yellen and Powell tomorrow, along with some other manufacturing numbers and things that are going to be coming out today. But as we look at the patterns here, we're seeing the PPM starting to roll over again. We did actually get to a trend mode just 2 sessions ago. It looked like we had a chance at rallying up, but then it faded right away. And I've been discussing this pattern over the last several days that I just don't see the breakout pattern here. And it looks like we're going to have to test some key levels on this chart. As we look at the market grid for today, the probabilities suggest that we're likely to see a S1 minimum possibility of going to S2 if we get through those levels, but there's a substantial amount of support right at 3880, which is just a touch below the S1 number, and then the 40-day moving average at 3866 is also going to be an important point. As we look at the market grid, that's basically an S3 hit. So there could be some weakness tomorrow if we are unable to get above this 3912 level, which is R1. So expect at least an R1 S2 level on the futures. As I go over to SPX on a daily, we were down 30 handles yesterday, down about 0.75%. It looked fairly positive for early in the sessions. We were trading above the 10-period moving average at 39.36. The market began to sell off. It was led by the Russell. The Russell just kept getting more selling, and ultimately it spread into all the markets. And it looks like we're going to have to test these moving averages at the 21 and 40 period moving average, 38.91, 38.78. As we look at the market grid for today, 38.88 is S2, 38.76.88 is S3. So just like in the futures, if we cannot get above R1 early in the session, we're most likely going to see at least an S2 number, possibility of an S3, and this will be a test of those moving averages. A quick look at the PPMs here. PPM 1 did penetrate through its first derivative after looking like it was trying to go into trend mode. We never got a follow through on PPM 2 or 3. This was the laggard, and ultimately what I've been talking about, referring back to the database review, is that we had to hold at 22% and ultimately get back above 42% to signal any type of sustainable rally. So this thing is failing. Most likely what we're going to do is a full retracement, maybe 0.5, 0.618 of the advance that we saw over the last couple of weeks. I'll cover that in the live stream on Wednesday. Next market I'll cover is the NASDAQ. We continue to trade within this unorthodox pattern that's with the 10-period moving average still rising at 0.24, right at trend level. We actually managed to hold that level yesterday as the low of the session was 12,979. The 10-period moving average 12,980. So right on it. We closed at 13,006, and we're seeing some strength overnight of 49 handles, up 0.37 on the session. So as we look at the PPMs, you can see they're still upsloping. PPM 1 is above its first and second derivative. PPM 2 is sliced through. So this is the scenario that's going to happen. What the configuration tells us is that we're likely to stay between this 12,900 and around that 13,200, which is at the 40-day moving average. We're going to remain sandwiched between those levels. I don't see it breaking out of there, and that 10-period moving average is going to be most likely enough to hold the markets and keep a slight upward slope, which will keep the Russell NASDAQ trade at least under pressure. Maybe it'll stabilize. The Russell futures are up slightly overnight, up 5 handles at 0.23, with there's still some leadership being garnered by the NASDAQ action. The final market that I'm going to cover tonight is gold. Gold's up 570. It continues to hover right around that 21-period moving average, 1728. Last trade 1730. The low 22, the high 33. As we look at the market grid, S1 1720, R2 is 1735. So we've had an S1 R2 print I still expect to see this market have a slight upward bias here over the next couple of days. I believe that move down below the 10-period moving average yesterday was not material, and we're likely to see this thing rebound and get back up into the resistance area. Now, the high end of the grid for today is 1744. I don't see us getting above that level, but we should have a generally positive session as we come into today. So this will end tonight's video. Thank you all for watching. Make sure you come to the live stream tomorrow, and if you can't attend, make sure to watch that replay. Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/WaveTech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.